Hello, everyone. My name is Carmela Walrond. I'm a partner at JLD Tax Resolution Group, and I've been working on cases, primarily people who owe money in taxes and can't afford to pay the tax owed, or also various tax issues that people may have. And I've been doing this kind of work for over 16 years.
Hey, that's great. Nice having you again, Carmela. Good to see you. It's been a while. So I'm Wayne Scully, and I'm a CPA. My firm is W. Scully CPA PC, and I'm a tax and business strategist. My focus is providing solutions to landlords, flippers, and real estate pros in the New York tri-state area. I offer tax compliance, business consulting, and high-value tax plan strategies to save clients thousands of dollars. My firm's motto is taxing is their job, saving is ours, or we give you $100. So Carmela, so we wanted to meet up today to kind of recap tax season. It's been like what, maybe 2 months already, 3 months? No, 2 months, right? Depending on if you're talking about corporate filing or individual filings, it could be between 2 to 3 months. But we just want to kind of recap, talk about our experiences this past season, and let people know maybe some pitfalls things you should avoid for next season, and so we can have better clients, people that don't get in trouble like the folks you deal with, and stay in compliance. So go ahead.
Sure. There are a lot of the pitfalls that I saw this past filing season are people not paying their estimated taxes if you're self-employed. Many people are very surprised of the large tax bill that the person or the couple may owe, especially if your income has increased from last year because, the pandemic. People were not working as much in 2020, but many of the people are resumed their income that they earned and even make more money in some cases and don't think about paying that estimated taxes. So then they have a very large bill. And as you people may know, the IRS charges two types of penalties. Late penalty for failure to pay estimated tax, and late payment penalties because the person cannot pay the full tax that is due when tax day, when the return is due April 15th.
Yeah, and really to dovetail on what you just said, I mean, the other big penalty is the failure to file. That's a huge one, right? People are not filing their returns, not filing them timely, and you can confirm this, but it's like 5% for failing to file your return, and if it's fraudulent, it could be something like 75% up to that. So really it behooves people to file in time, pay estimated taxes, and just again stay compliant. There, and I mean, in addition to what you said, there are like a bunch of other penalties that people could face, but those are the ones you mentioned and the one I just mentioned are probably the most common ones. But in fact, it's funny, I just did a video on people who who earned more than $100,000 and haven't filed, and apparently the IRS is targeting those people. So you might find people file, the IRS ending up filing what's called substitute for return on their behalf, and that's, you can talk to that some more, Carmela. But essentially, they file a return on your behalf. They don't give any credits, no deductions, nothing, and then you're stuck with that bill. And if you don't act on that right away, you might, that might be cemented, and then you have to really go through a whole process of undoing that to actually, you can fix it, of course, but it just makes it harder when you take a longer time to do it.
Exactly. I have cases of clients who have not filed for several years. And that is true. That is also done on the state side as well. So I have clients from New York who don't file returns, and then the state or the IRS will file for you. And the thing also is that there's something called voluntary disclosure that I do with a lot of my clients, my state clients, in which you can file those prior year tax returns. Basically admitting that you didn't file and give it the reason why, and you can get an abatement on the penalties. Because if you go to someone and they file those back returns, guess what? You're going to be hit with those penalties: late filing penalties, late payment penalties, failure to file penalties. And if you go to a professional like myself, a tax attorney, you can save money on those kind of penalties by going through the voluntary disclosure process.
Now, is the voluntary disclosure process available all the time, or is that based on like if they run those programs certain times or is it always available?
It's always available. You just got to submit the application and the reason why. And my success rate is approval for all the voluntary disclosures that I submitted it for the various states, like New York, New Jersey, and Connecticut.
And
Are
that's
some examples.
what about on the federal side? Is also
There's only voluntary disclosure regarding if you have foreign bank accounts. That
FBAR.
Right, FBAR. But I'm saying that still you want to be able to try to lower your tax bill as much as you can. And many people who have not filed, obviously, a federal return has not filed their state returns as well.
Well, I mean, you're absolutely right. I mean, and you raised a very good point about the voluntary disclosure, because I personally didn't know that those are always available on the state level. So I learned something new from you today. For sure, that's something that people need to know and, act on it. So see, we can always take the horse to the water, we can't make it drink, right? So,
Yes.
but people definitely need to know that that's very useful information.
Wayne, also, I want to discuss some cases regarding bankruptcy, because I've been getting a lot of those kind of clients as well.
Oh, awesome. Go ahead.
The clients that I get regarding bankruptcy is that whoever they go to for bankruptcy filings, they don't review the IRS transcripts. And guess what? Within this, if you don't file bankruptcy petitions, not all taxes are dischargeable. And for example, I had one client that he was now stuck with a $133,000 tax bill because their bankruptcy, he would have waited 2 weeks.
Wow.
That would have been included.
Wow.
So now I had to file a closing agreement, and luckily it's in the process of getting a settlement regarding those. And these taxes are old, like from 2006, 7, and 8. But with the penalties and interest, a $40,000 tax bill is now $133,000.
Wow. And
by simple reading the transcripts, the bankruptcy attorney could have waited and had those years included in the bankruptcy petition.
So let me ask you this question again. You're edifying me now. So the bankruptcy, there's a 240-month rule, or there's some sort of rule on that, and it's based on when you file the return, when the tax is assessed. And
yes, it's based on, first of all, also standardized tax returns are not included in bankruptcy. In other words, that's another reason why I get these cases, because if someone file a bankruptcy petition and the IRS file the returns, right, those are not eligible for the discharged.
The SFRs, the substitute returns,
yeah. Right? Yes, that want to be substituted returns.
Right.
And also under the bankruptcy code, it has to be within 2 years or 240 days of the tax assessed. But again, that takes reviewing the account transfer.
You said months, but yeah, days, 240 days.
Days, right.
So again, if someone, in the case that you referred to earlier, the returns going back to the tax year 2006, is it that those people file those late? Is that or the IRS had the SFR? What's the story with those?
Sure. Those returns were filed late, but still, it was filed in 2014, and the person who filed the bankruptcy petition in 2014, if they would have waited and had those review the transcripts, it would have been eligible for that to be included. I actually had another case for another one where they end up still owing $20,000 in New York taxes, and if the bankruptcy attorney would have waited 2 weeks, those returns would be included. It was from 2014, and so time and time again, that's also important, having a thorough reading of those account transcripts. So I end up getting those kind of cases as well.
So again, I don't mean to delve too deep into this, but
sure,
I'm really intellectually curious, if nothing else. So if the returns are filed in 2014, right? Isn't that more than 240? I mean, I'm confused.
Okay, so this is how it will work. So for example, if the person filed the returns in 20, just put it for examples for today. So say, for example, the person filed the returns, 2021 returns in this year, 22. So the person would have to wait till April 15th, 2024 or later to file the bankruptcy petition. Right. So 2 years.
So I'm saying, so the return was filed, I'm assuming the bankruptcy is something recent, like this year, right? Or last year. So if they filed a return in 2014, wouldn't that be like?
No, the issue is that the bankruptcy attorney filed the bankruptcy petition in 2015, and the returns were filed in
Okay, gotcha,
2014
I get
for
you.
the years, and then they're
Right.
shocked when
I get
New
you.
Jersey sent them a bill for $132,000, and then thinking that was already included in the bankruptcy petition.
Gotcha. So that
Mhm.
need that window when they filed okay, relative to when the return was filed. I understand.
Yes,
And
yes,
it's still sat there until now, right? So,
correct.
okay,
Yes,
gotcha.
and penalties and
But if they had filed a return in 2014 and you're handed, that would not be an issue now for this year because it'll be so long, after the
yes.
I understand. I totally get get the fact pattern now.
So it's very important, like when you're and this has been happening, like I said, in actually 2 recent cases that I end up retaining, is that these bankruptcy attorneys don't review their account transcripts.
They're not experts like you, right? In the tax law arena, so they don't really know. But I mean, that's why it's so important to seek the right help. But a lot of lay people, they don't know. They don't know. They go to bankruptcy, probably assume the lawyer that attorney would cover everything, not realizing that you guys have specialties, right? So that bankruptcy attorney probably knew nothing, but still probably an obligation to look into it, right? I mean, would that person have some reason to, sue that lawyer? I don't know, they dropped the ball. Would they have a duty to know that in advance?
Yes, but I'm saying that they would have to take that separately with the bankruptcy attorney. I'm just here to basically clean up the mess of that. But these are questions that people should ask if they consider filing for bankruptcy and they owe a significant amount of tax debt.
But that's what I'm saying. Most people don't even know that to ask. I'm saying they just assume that bankruptcy insurance is going to take care of everything. I mean? So they won't know, but not for someone like you putting this video out there. Will people know? But I'm just saying, normally the lay person does know. I mean, I'm not concerned like a lay person. I didn't know a lot of things they were saying. So you know what I mean. So, I feel that then that responsibility would fall on the attorney, right? Your lane, what you're doing, and if it's something that you're not clear, there's a tax debt. So then, if you're not clear on that, you should, probably talk to somebody else. That's what I feel. But again, this is beyond the scope of what we're really talking about today. But that's just my thought, because the person ended up having to pay a settlement. Whatever they're going to pay, it's going to be more than they should have paid, right? If they have to pay $10,000, no, they still $10,000 they could have saved if they're given the right advice, right?
Exactly. So, but there are options available if, like I said, if you run into that circumstances where you still owe a lot of significant amount of taxes, and that you already filed a bankruptcy and it wasn't included. Like I said, there's closing agreements for New Jersey, maybe eligible for maybe offering compromise for the federal side. So there are options available to people out there.
But if you end up still paying something, my point is, and again, I hate to belabor this, but my point is that if that person ends up paying $10 out of their pocket, they should have paid $0, right? So it's not fair. You know what I mean? So anyway, it is what it is. So you did the best you could, and it is what it is. But I'm just saying, and that's why we do videos like these, to educate the public, because the average person just doesn't know. Sometimes the person that's above average doesn't know, what I mean? So, but each one teach one, and no one knows everything. So, and if you've been doing something for a while, sometimes you can still, not be aware, of certain nuances. So, but yeah, thanks for bringing that up. What has happened to you?
And there's other kind of cases, I would say, that I see a lot. It's a lot with what's the other? Oh, another case is people who owe money in innocent spouse cases. I've been getting a lot of those. People who are either going through a divorce, and these kind of innocent spouse cases that I get are like if another spouse withdrawn money from 401k and not knowledgeable about it. And I recently retained a case where this person received a $14,000 tax bill. So the process going through divorce, and the person took out money out of their 401k and she didn't know about it. So what the IRS does is they send a corrected tax return and say, reporting that those distributions that was received by that spouse. But since you married to that person, you're joint and severally liable. But as an attorney, but there are options out there available for people who are going through a divorce that you're not liable for that tax bill.
Yeah. That's really interesting stuff. I mean, a lot of things happening out there, especially now with, post COVID, or well, not really post COVID, but hopefully that happens sometime in the future. But a lot of people are going through a lot of things when it comes to tax debt, and with the foreclosures that's going to happen too. That's going to be another big area where we'll see.
There's another, also I've been getting a lot of calls about businesses that are closing as a result of the pandemic.
Yeah.
Retail businesses,
right.
Especially in New York,
right.
And they owe sales tax, and they had to close the business, but now they have a huge sales tax bills. So there are options out there for people who are now. Because the thing is that, all the benefits are all gone now, regarding unemployment and those kind of things,
right.
PPP loans. So
yeah.
all those kind of programs are gone. So now a lot of these businesses, as a result of the pandemic and changing landscape of people shopping, I've been getting calls from retail stores that are having to close their New York locations. And then now they have a huge sales tax bills. Or restaurants too.
Right.
I've actually retained a case of restaurants that also owed back taxes as well.
Is that sales tax or income?
Payroll tax. Payroll,
yeah. Payroll is a big one. So what do you do after you help them out of this situation? What do you do to, if anything, do you do to have them stay in compliance?
Sure. Many of the clients, and that's how I was able to grow my compliance practice, they retain my services, because once you get, for example, an offer and compromise settlement with the IRS or the state, like New York, you have to make sure you file your returns timely for the next 5 years. So a lot of the clients end up retaining me to prepare the returns to make sure they're compliant. And also there's another issue of benefits of hiring an attorney, is that I had cases in which, they go to somebody else and the person, never filed the returns, and then they get a letter about revoking their offer and compromise. And how that works is that if you don't file a return timely, the IRS will revoke the offer, and then you have to pay that tax that was that you were able to get a relief on in full. So I was able to save a couple offers that way as well, meaning that we're making the phone calls to the IRS, submitting copies of returns, or in some cases, I had one case I saved a offer of $100,000, showing that the taxpayer was not required to file a tax return because she lives in a house with her son, and her son is supposed to, and she collects Social Security. And the IRS agent over the phone was she lives in the house. I said, well, her son lives with her. So he, as the equitable owner of the house, he can report the mortgage interest on his return. So now the the settlement that I got for her remained intact, because she had hired an experienced attorney to explain the law to the IRS, saying that she did not have a filing requirement. So those are the kind of cases I handle as well.
Awesome. So if it's a business, right, and there's you can help them to file the returns on time, but let's say there's an underlying issue why they're always late or why they're not paying the money, that type of stuff. Do you advise people on how to, hey, listen, keep the money that's for the IRS in a separate account, so that you can, then, pay them timely, or they can dip into their account and take the money, so you don't run into this problem again, because that's a lot of the issue, right? These people are repeat offenders, if you will, right? They keep coming back because the root of the problem is not being addressed. You know what I mean? So what do you do about that?
Yes, I have cases, and those kind of cases, I would tell the taxpayer offers these services, such as there's several services out there, for example, like ADP, that provides that payroll service, because there's a record that those filing of those payroll tax returns, because the last thing you want to get is assessed trust fund penalties. Trust fund penalties are the worst.
Those are tough.
So, and those kind
And
of
they become
agencies,
personal as well at some point, and they become like, they get assigned to the individual, to the owner of the company.
right. The trust fund penalties is not against the business, it's against the owner of the business. And they're hefty penalties. So that by having a payroll service, it will keep that company in compliance with the payroll tax returns filings in the future.
Yeah, yes, that's the thing, right? I think addressing the root cause of the problem is really where it's at, to get that person on the right track, or keep them on the right track, because otherwise it's just going to be like a cycle, right? They're going to keep coming back, and it does happen for a lot of people that don't know, or who don't know, people who, I don't know if it's a personality thing or a character thing, but the people that have these kinds of issues, they tend to have them on an ongoing basis. It's like, some people with credit issues that, they can't seem to like claw their way out of that hole. They just keep going back. So I think it's more of a mindset, the way you think, the way you approach things. So there's a book out there, and I can't remember the name off the top of my head, but it talks about having these accounts, like separate accounts. Maybe you have an operation account and you have an account for taxes. So when you earn money in your business, automatically you figure, okay, you pay yourself first, right? I think it's called profit first, as a matter of fact, if you've heard of it. And one of the other accounts you want to have is a tax account, and you carve out, whatever, 25%, whatever it is that you deem based on the nature of your business, and you put that money aside in that account, so that when the quarter ends or when the year ends, you'll have enough money to pay your taxes, so you don't owe and end up in a situation where you have to see Carmela. So, but inevitably, some people will not do this, right? Some people won't do what needs to be done, and they're gonna have problems anyway. But it's really not just, for me, from my perspective anyway, not just saving people when they're in trouble, but actually showing them a way, consulting with them, showing them a way how to avoid that. Sometimes people need counseling. Sometimes people need help external, like from another professional, right? Because there's something going on that makes them, habitually or consistently have issues with the IRS or state. So that's really the issue. But thanks for sharing. I mean, that's, I don't have those really crazy stories, but for me, I'll tell you what happened to me. I had an identity theft issue this past tax season. Someone used my identity.
Oh my goodness, terrible.
Very terrible. So, and it wasn't like, where they took my, where they took out a credit card in my name or something like that, but it was where someone basically handed off to a bank, because when you're self-employed and you apply for a loan, most times the banks want an accountant letter or a CPA letter, something like, saying, hey, I'm familiar with this guy as my client, I kind of know his business or whatever, which I never do, because the liability insurance says never to do something like that. Because what happens is the bank could, put you on the hook for that, right? Something happens, the loan goes, south, person can't pay, they could actually try to sue us, right? Or at least sue our liability insurance. So, we're always advised never to sign those letters. Anyway, this person took the letter and created some letter. I know the person. I've done work for them probably 15 years ago. I done work for them. So they took that letter, created a letter, gave it to the bank saying, I was their CPA, I've been so for the last 5 years, I prepare all the returns, blah, blah. And don't you know, the person at the bank called me to verify, to see if I actually signed the letter. Of course I said no.
Wow.
So really I was really not happy about that. I was not happy at all. And I spoke to the person, of course, being that nobody ever likes to admit that they're wrong. So that person never admitted that they're wrong. Oh, I didn't do it. First of all, I didn't do it. But I'm like, we have the evidence. There's evidence. I mean, I'm not getting a call just out of the, person that picking up my name on this call, right? You actually did this. That's how the person got my information. I was able to call. Actually, I think what they did is they searched me, because the number they put on the letter is not my number.
So, okay. So that's right.
So the bank, the underwriter, They just searched my name. They Googled me and they found me and then called me. Hey, did you are you the accountant for such and such? No, I know the person, but I'm not their accountant. So that's where it starts. So that just was not cool at all. So that's one of the things that happened to me. So the lesson for you can't really stop someone from really using your name. You won't really know unless something like that happens. But for people who have tax returns, you probably want to make sure you get an IP pin, which is something new there. It now allows everyone to get an IP pin, so that if someone files a return, they have to put the pin on the return before they file. Otherwise, it won't go through. So that's one of the things. You want to check your credit report regularly, right, to make sure that no one's taking a credit in your name. And maybe if you run a DMV abstract, for once in a while, because sometimes someone could actually try to duplicate your driver's license. So these are the kinds of things that, again, it's not, I didn't face those issues. I have not so far, knock on wood, thank God. But they're kind of like all related, right? Someone's using your identity inappropriately. It's illegal, right? It's illegal to do that.
Yes.
Right. So it's probably a federal crime or something. But the point is that you want to protect yourself the best way you can by doing the things I just mentioned, checking your credit report, make sure you file. That's not the reason why you should file on time too, by the way. File returns on time, because someone else could be filing unbeknownst to you. And if you haven't filed for 5 years, someone could have gotten you a refund like for all those 5 years. Now you could have, try to resolve that, which is a headache. So you want to file timely. You want to, get your IP pin. It can be a hassle because, again, you need the pin. They mail a new one every year. You need that pin to put in your return to file the return. So, but if the beauty of it is, if someone gets your information, tries to file a return, they won't be able to do it unless there's someone at home at your house,
Yes.
and they'll have to get the letter, But aside from that, they won't be able to do that, right? So, check your credit, run a DMV abstract, and make sure no one's filing a tax return in your name. So that's what that happened, and people are, have issues with I gained some, it's very cyclical, not cyclical. It's very, it's where you gain clients and you lose clients every year. And I find that I changed my fees, adjusted my fee structure, and I lost some clients. So that happened too. Yeah, I do some resolution work, and I've closed a couple of cases, mostly installment agreements, because as you know, and maybe you could talk to it more, but a lot of people don't qualify for an offer, right? Most people won't qualify for an offer. They're not as easy as what you hear on the radio. Oh, 5 cents on the dollar. No, it's not that easy. So most people will qualify for a payment plan because they want to get their money, and if that's a way for them to get it, they'll accommodate you. And of course, you're going to pay interest and penalties over that period of time. But most of them were installment agreements. Some of them were repeat offenders, people that were on the installment agreement and then incur new debt. So I don't know if you want to talk about that, but when it's not a good idea to incur new debt, because that could throw you out of the payment plan installment agreement.
Yes, I could talk more about that. I have cases in which sometimes the IRS make changes on the return because the person didn't provide all the income information at the time the return was filed. So that's why it's good to hire like a tax professional, because that person can contact the IRS and have that installment agreement reinstated. So I did this recently for a client that I had a partial payment agreement. Partial payment agreement is a person who owes, a lot of money in taxes, and the husband and wife are pretty much on Social Security, and they don't qualify for an offer in compromise. But so anyway, because it was within less than I think 12 months, the IRS was able to include the new taxes in the installment agreement and have that reinstated. So yes, that is true. If you incur new debt, the installment agreement will be revoked. But there are options available. First time penalty abatement, maybe get those penalties removed.
Right.
Maybe a partial payment agreement. So there are options available or out there for you.
Yeah, we could just modify the agreement that existed, because again, the client I dealt with, they had $30,000 in debt initially, and then, you know, and then they add another 50,000. This is my tax prep client, and they add another $50,000 to that. So of course their payment amount now is way higher. It's probably 3 times what it was before. But if they had tried to pay that money before, right? Before, well, of course, $60,000 is nothing to sneeze at for some people. So they probably couldn't pay it before the deadline. But if they were able to do that, they would have saved money by not having need to modify that, and then it would save themselves the hassle as well. So you can modify them and update them, you know, right? And but it's just you know, it's a stressful thing for them, and it just costs them more, basically.
It's true. And then also it's good to have a professional involved in these kind of cases because, like I said, I have cases in which I review the transcripts and some of these debts are so old that it's going to expire soon.
Right.
So guess what? They're like, I have one client, some of these debts are going to expire next year. So I put them on a partial payment agreement rather than going through the process of going through an offer and compromise.
Right.
Why bother if the debt is going to expire next year? So you're right that a lot of people, you know, it's on the commercials about offering compromise, but sometimes you may not need to go through that whole process if the debts are really old.
Right.
So that's the point of like hiring a, you know, professional to review your transcripts.
Right. Yeah, and also, I mean, even with those people, sometimes even if they do get an offer, they actually IRS said, yeah, you know, we'll approve the offer. They can't make the down payment. They don't have the money to do it. So, you know, that'll make it fail. You can't make the 20% down payment or make those, you know, monthly payments for 24 months, you don't have a problem, you know. So sometimes, as Carmela said, sometimes the offer and compromise is not suited for everyone. And you know, sometimes, you know, why bother? Because there are other options that are probably more efficient, that'll save you more money. So yeah, for sure. What about this new rule about 1099s? What do you think about that? You know, you have to file the if it's below, if it's section, it used to be the third-party processors like your you know, Airbnbs and whatnot, they would only issue a 1099 if you had made $20,000 for the year and had X amount of transactions for the year. Now they're required to do it for anyone that they essentially make $600 or more. So that's going to cause more problems, right, for some people, because where they don't think, oh, I ain't got to report that, you know, and they probably leave it out or they get it late. They don't file it on their tax return. All of a sudden, you know, months later, which, by the way, I have someone owes there's a proposed amount for this particular prospect, where the IRS is saying, you know, you need to give us $22,000. Why? They set up a Facebook account, a Facebook it's what do they call it? It's to raise money to help people in his own country. Those people have problems and they do a fundraiser. It's a fundraiser. I'm trying to think of it, a fundraiser to raise money, to send money to his home country. Now he did all that stuff using his social security number. Here you go, Facebook issues a 1099 to him personally.
Yeah.
To the IRS, IRS says, hey, what's going on? You didn't report all your income. You know, so now he's stuck. Potentially, you know, you have to now get all the documentation to try to support that these are indeed donations and not income, and like basically file the money, basically, right?
But see, if he would establish a nonprofit, right?
Right.
To an attorney, establish a nonprofit, right? And then do the fundraising, he wouldn't have the problem.
For sure.
Right?
That's the thing. A lot of people going back to what I said before, a lot of people just don't know. They don't know anything to seek the knowledge. Or sometimes they're penny wise and pound foolish. They go, oh, I don't want to spend the money to go talk to an attorney, you know what I mean? Or a tax advisor. So I'm just going to do it this way. You know what I mean? Some people, this guy happened to be, he's not very, English is not his native tongue. He probably doesn't understand very well. But the point is that, yeah, it's always good to seek advice before you make moves like that. You're talking about tens and tens of thousands of dollars. For him to get a $22,000 proposed bill, he must have collected like 100 for over $100,000. That's my guess. And
Well,
that's
my point
that's
is that if he would have went to an attorney like myself,
yes.
would have filed the necessary documents to file a 501c3, and then he would have collected those donations.
Totally.
He wouldn't have a tax bill.
I know, I totally get it, but
It'll be zero.
No, I know, I totally get it. But my point though, on top of what you said, is basically some people just don't know. They don't know. They probably this guy's new to the country. He's new. You know what I mean? He's probably here like a year or two, something like that. So he's not aware of a lot of the rules. But you're right. People should really try to seek this out. Or they have people around them that should be telling them, hey, listen, you may want to think about starting a nonprofit versus doing it this way. You know what I mean? If you're going to raise funds on Facebook, have it tied to nonprofit so that you don't have an issue later on. But you know, that's either here nor there. The point is that at this point, now he has a proposed tax debt, and he has a certain number of days to respond to them. And it's just going to be a lot of documentation to support that and hopefully the IRS is convinced, but it has to be convincing, right? That this is actually not money that he's put in his pocket and spent, but he sent it overseas. So, point is, these are the things that people go through. These are the things that you should avoid by talking to the right people, talking to professionals that know what they're doing, right? Have your best interest at heart. That's also important. And try to stay compliant. You know, you can't say, oh, officer, I didn't know the speed limit was 25 miles per hour. You know, you should know that, you know what I mean? So, I mean, you could try, but chances are you're not going to win that. So, but yeah, I mean, people just need to be aware and try to stay in their P's and Q's, you know, especially when it comes to the IRS.
Yes, and like I stated with the 1099s with the new rules, this also applies to people who have their own business and they pay somebody more than $600. Yes. Make sure you issue out a 1099, because then when you're audited, that contract labor, you cannot report it. It will be disallowed or not allowed if you can't produce a 1099 for that person you paid in cash more than $600.
Okay. So yeah, I hear that. So you're saying that having a check, if you had a check as proof, then that would be, if you didn't have a 1099, if you had a check, I paid Joe Small, I had a contract, would that still would not
nope, that would not be allowed in the audit. Nope, you have to have that 1099.
Okay.
Yes.
All right, okay. Well, you heard it, folks. You need a 1099 for sure. If you had the check that you wrote to that individual and you had a contract with the individual, you should definitely do a W-9, collect the data you need to prepare the 1099, so you don't have problems with the IRS for sure. And by the way, I must note that if you're paying someone outside of business, a contract, let's say, comes to your house to work, and it's not business related, you should not issue a 1099. Am I correct on that?
Yeah, like someone doing work at your house, like you're fixing a fence or something like that. Yeah. That's expense you can deduct from regarding your property on your Schedule E. I'm talking about Schedule C.
But even I believe, and I correct me if I'm wrong, I believe if you're a landlord and you have someone do repairs on the house that you're renting, you should be issuing a 1099 as well.
Not in those cases, as long as you have like an invoice. Like repairs.
Yeah, like repairs, yeah. So
like repairs, fixing something. Yeah.
We can revisit that one, but I kind of believe you should, but I could be wrong though. But yeah, I mean, but the point is though, where it's applicable, talk to the right people. They'll do the research, make sure that they know what the rules are currently, because these rules change a lot too, right? And so that you can be in compliance. You can file those information returns like your 1099s, and prepare yourself for the unfortunate potential that you'll have an audit, right? So you'll be prepared and not scared, as one of my friends used to say to me, be prepared and not scared in the event that the IRS comes knocking, right? But yeah, I mean that's kind of like for me, I don't think I had any things that really stands out. Like I say, except people are pushing back on fees, and people understand like it's really, if you want to hire a professional that's going to do you justice, you don't want to go to the fly-by-night guy around the corner that sells ice cream on the side. You want to talk to someone who's qualified, has the experience, and for that, you got to pay. I mean, it is what it is. So people need to understand it as well. That we have families, we have obligations as well, and we create our fees around that, because that's really important to us. So we provide a service and we expect to get compensated for that service. So you should vet what, of course, price is a factor, but you should vet the preparer or the professional, using other criteria, not just the price. Because sometimes you pay the lowest price and you get the crappy job, right?
Yes, and I always tell people that, yeah, you may pay a lower price, but that person is not around to address any serious problems, letters you get from the IRS. I can't tell you how many cases where, not even, some places don't even prepare an amended return, and you get a notice from the IRS, you'll X amount of dollars, and that person is gone, not available. So those are the kind of things you deal with. If you hire an attorney, you pay a fee, that person's around when you get those kind of letters. And then also I want to say to people, don't wait because these issues regarding taxes, it doesn't go away. Actually, the matters get worse. Yeah. And I have actually seen cases where it comes to the point where the US government is now suing you for back taxes. And these are people who hold significantly high tax debt. And that's what I'm saying. If it would have been addressed in the earlier stages, because now you come to the point where you have to hire someone like me regarding a legal matter, and it's way more money when it becomes a case that is filed in court. Right. And of course, and I have cases like that on the docket.
Yeah, and then you definitely need to go to an attorney for that, because a CPA can help you with that. So
yes, and that's why I said it's even worse, because now not only that regarding the fees and the penalties, is now a legal matter in court, and then that's expedited.
Yes.
In court if nothing is done.
Yes. So speaking about that, so regarding, I know we talked about the collection expiration date, right? The CSET date.
Yeah.
But typically it's like there's a certain number of, the IRS has a certain number of years to collect the debt from once the debt is assessed. Just for people that don't know. But they could potentially extend that date, right? They could go to court and get that date extended.
Yes, and that's what I'm saying. These are cases where I have clients who owe like $500,000 in taxes, and with the penalties is almost $800,000. So that is correct. Doesn't mean that you have a high tax debt is going to expire. What Wayne says is that the government ends up becoming a legal matter and file a lawsuit against you for those back taxes to extend it. That is correct.
Yeah. So
because I have cases where the taxes are back, 2011, and it's over, like I said, $500,000, $800,000 of taxes. But again, it all could have been avoided if the person didn't sit on it for years.
Yeah. So folks, don't stick your head in the sand, think it's going to go away. It never goes away. It never goes away. Probably but even if you die, right, it could go against your estate, right? Right?
Oh, I have cases like that too. Yes, I have cases like that where, unfortunately, the taxpayer passed away, and now the children are now dealing with the taxes that's owed by the deceased. Yeah. That is correct. So it doesn't go away when you pass away. Actually, it becomes more of a headache with your family.
Right. And by the way, just on the state level, I've dealt with people in various states, and the states have different rules, right? Like, for example, New York has a 20-year expiration date, 20 years. Whereas Maryland it never ends. Maryland, I don't know if you know.
Oh, I didn't even know that Maryland never ends.
It's into perpetuity. It never.
Oh, that's terrible.
It's very terrible. So really, thinking that, you definitely should take care of it as soon as possible, because as you're speaking, the interest and penalties are adding on. And again, we talked about the percentages. It's not cheap. It's not cheap.
Mhm.
It's not low interest. It's not 1%, 0.5% like you get a credit card where you get introductory rates. It's very high percentage. So sometimes they even tell you better off charging the money on a credit card than having to pay them interest and penalties because it's so high. And again, if you talk about fraud or something, it's even going to be higher. So folks, and then in that case you have to hire an attorney as well, right? Because now it's
Yes, and not only that, in certain states they're actually very aggressive. Like in New York, if you own a business and sales tax, they can shut your business down.
Yeah, for sure. And it happened in Jersey too. I know in Jersey.
Oh, New Jersey too, or they'll pay your business a business. They'll pay your New Jersey or New York. They'll pay a visit saying they're intending on shutting down your business because of that past due sales tax. So that's how I get those calls as well.
Right.
Mm-hmm.
So, and even the image of that is not good, right? From a PR standpoint, I imagine agents coming to the office, say, we're going to shut you down. You just don't want to have that kind of among your employees and everything. It's just not a good look. So, folks, there are really a lot of great reasons why you want to pay your taxes, why you want to file your tax return first of all, and pay your taxes on time if you can. Things happen, life happens, things do happen, and we understand that, and that's why it's good to be able to talk to professionals like us, so that when things do happen where you can pay, all right, for that we can work out something with the IRS or with the state to get that resolved for you, so we can look at that stuff in the rear view mirrors, right? So it's behind you, because you can't really sleep good at night knowing that you would IRS a ton of money. It's just not. How can you? How could you? You know what I mean? I suppose some people do, but for most people, I would imagine that's not a very good feeling. I don't know if you have anything else to add, Carmela, if you want to.
Yes, I'll just wrap up saying I have my contact information. This is 201-604-2432. Again, my contact information is 201-604-2432. Obviously, when this video will go out, my contact information will be available, and I offer free consultations. I do not charge for consultations on any type of tax issues that you may handle. And I do, in some rare occasions, I handle cases where the government owes you money. I had a case recently where a client got nowhere regarding a refund that he was eligible for. He had 3 children, and the IRS wanted documentation, on the children and things like that. And this was back in 2017. So now he's getting a check for $9,000 with interest
Awesome.
from the government.
Awesome.
Because he hired me to, resolve this with the government. So I also handle cases like that as well.
I'm glad you brought it up, because I had a client probably maybe going back 10 years ago, and his ex-spouse, his ex-wife, every year, as soon as she got her W-2, she would file right away. That's fine, right? That's fine. The problem was she wasn't allowed to file for the kids because he had custody, right? He fought for custody, spent a lot of money to hire attorneys to get the custody of the 2 girls, which is tough. For a guy to get custody too, it's tough, but he did it. So anyway, from a tax point of view, she filed the returns, usually gets the money before him. He's self-employed, which I was told, listen, you're self-employed, you can actually get your return, get everything done by December 31st and file by when the season opens, before she files. Because most people start getting their W-2s in probably the first week of February or something like that. So anyway, long story short, she kept on filing. Every time we have to file, you'd have to wait until the summer to get his refund back. So what we did was we got an IPIN for the kids. And so she wasn't able to file them because she didn't have the PIN, and so we kind of fixed that. But to your point, I mean, it doesn't work one way where they're always trying to get money from you. Sometimes you can get money from them too. So that's a great job, Carmela. Great job. Yeah. And if you want to repeat your contacts, then I kind of
Yes, my contact information is 201-604-2432. And I handle, cases in all 50 states. I also have clients internationally as well, because I used to be a tax attorney at an immigration firm. So I handle cases and, their tax issues related regarding immigration matters. That's my also other specialty.
Do you speak like another language? Or?
No, I don't speak another language. It's that I have clients, like, for example, applying for an I-10, and then also handling, many of these clients, they have to get installment agreements or offer filed, or getting passports reinstated because they owe back taxes.
Some of them have F-bar issues too, I guess.
F-bar, not so much regarding like, it's if they have foreign income, it's like a bank account in another country, but I handle cases like, someone wants to sponsor their spouse, filing an I-10, and then, like I said, because they have immigration hearings, they need that kind of documentation. So I know exactly what is needed.
Awesome. Yeah, and I'm Wayne Scully. My firm is W Scully CPA PC, where we say taxing is their job, saving is ours, and we give you $100. And I really mean that. I haven't had to give $100 yet, so hopefully I can keep that track record going. But I do tax compliance. I prepare returns and such. I do business consulting and tax plan strategies to save people thousands of dollars. So if you want to reach me, you can check out my website, www.wscullycpa.com, www.wscullycpa.com. So that's the best way to reach me. All my other contact information is there. So you could set an appointment on my calendar as well. And that's how you get to me. So thanks, Carmela, for taking the time out to talk to me. And I really learned a few things from you, which is always the case, right? We learn from each other.
Yes. And again, Wayne, thank you for this opportunity for participating on this seminar, on tax issues.